Today, we're going to take a closer look at Unity Software. The company just reported earnings yesterday after the market closed. Unfortunately, the market did not like results, and yesterday the stock price was down after hours. But we can see how crazy the market is because pre-market the stock is up roughly 12.5%. I don't believe there's anything of a secret message that Unity sends out. I do believe what ended up happening is this right here. Dow futures surged more than 800 points after October inflation report is lighter than expected. We also have peak inflation in Europe is almost within reach, European Central Bank members say. So these two headlines are pretty much saying, hey, it's a great time to invest in growth stocks again. The world is not ending like we previously thought less than 12 hours ago. So in today's episode, I actually want to take a closer look at Unity's earnings. I personally am super bullish in this company, and even though the results might not be what many expected, I do believe there's a lot of hidden gems hidden in this earnings report. So let's take a closer look.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
If we start off with top line numbers, total revenue for the third quarter was $323 million, up 13% year over year. And this is supposed to be a growth story, even though it is growing at double digits. Many are expecting more of a 30+% year over year growth. So even though it is growing at some nice levels, this is not what investors are expecting when investing in a growth company like Unity. They do mention that their Create delivered $129 million in revenue this quarter, an increase from 54% year over year. Their Create solution is probably one of my favorites. This is the one that helps with the overall game creation, but this creation is also used outside of gaming. Operate delivered $172 million, down 7% year over year, but up 8% compared to the previous quarters. For those that are not familiar, this Operate kind of deals with the user acquisition with advertisement, and this is a company that has seen a few issues the past few quarters. They do mention that those issues are past behind them, and that's why they show that sequential growth. At the same time, the macroeconomics are definitely impacting the overall advertisement space, which has caused this market to kind of decrease. As we see, it is down 7% year over year, and it is the biggest portion of total revenue, so it has the biggest impact at the end of the day. Let's jump into the Create market, and one of the great example is Unity. They win when the customers win, right? There is some form of revenue sharing. And they did have a great example with a brand new game that just recently came out, Marvel Snap, developed by Second Dinner. And I may say, I'm usually not much of a gamer right now, but I downloaded Marvel Snap about 3 weeks ago. I'm still playing. I'm spending a little bit too much money than expected. This is currently the #1 on the iOS and Android App Store in their own category. And the great thing, like I mentioned, this is a company, Unity, they work with their customers. If their customers win, they win. And the senior director of software engineer at Second Dinner said this: Unity is a very close relationship for us. It feels like we're one team with a shared purpose, taking on challenges together. And that's what needs to happen, right? Unity wants to make sure all their products are running smoothly, all their advertisements doing strong, because if Snap is going to be making money, it means Unity is going to be making money. They did mention outside of games, they are seeing strong growth in the digital twins market. For example, the Orlando Economic Partnership is starting on their phase 1, which is going to create the first 3D regional digital twin. Unity has also made a few kind of acquisitions that kind of help with create anywhere you want. So a lot of kind of clouding solutions with Parsec and Sync Sketch. They kind of just show us a little bit more insight here. They mentioned that the combined annual recurring revenue of this business, which is Create Anywhere, grew north of 100% year over year. I do want to say most likely most of that growth is coming just acquisition based, but still, in the fact that the third quarter they closed their largest Parsec enterprise deal to date, which was over $1 million in annual recurring revenue. They also mentioned that Raised by Wolves, an HBO Max show, relied on Sync Sketch to deal with a lot of the visual effects shots. This quarter, they also announced the launch of a significant pricing and packaging change to their Unity Pro, Unity Enterprise, and Unity Industrial Collection offerings. They raised prices between 13 and 25% across these offerings, the first significant price change in 3 years. The main reason they are changing pricing is the overall company has done numerous acquisitions. The amount of solutions within these offerings have grown dramatically, so they are changing the pricing accordingly. In my opinion, it makes sense. As you continue to grow more solutions, obviously you are expected to charge more. Now, the next one I'm going to take a closer look at is one in the clouding market, and this is in initial phases. I think this has huge growth potential. But first, if you are enjoying the episode, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you want to listen to the #1 upcoming semiconductor investing podcast, make sure to click the video above where I do a weekly episode on the semiconductor market, and make sure to subscribe. So they do mention that they are shifting towards the cloud, enabling ratable revenue. This quarter, they released the private alpha of their cloud-based digital twin solution. The platform is in private preview internally and with select customers in information technology, energy, and construction, and they will have more details on this platform as they move beyond their alpha stage. If we have some great news here, I do believe this is another kind of boost revenue for the company. Now moving to Operate, this is that advertisement, that acquisition, the solutions after the game is created. This is now being changed to Grow Solutions with the recent acquisition of ironSource. ironSource is making this platform so much stronger in the user acquisition in the advertisement space. They do mention that the Operate pre-acquisition, because the acquisition actually happened this quarter, grew 8% on a quarterly basis. They do mention that they are growing their share of wallet with several of their largest advertisers. They also saw an increase in new publishers partnering to integrate advertisement placements with Unity. So that's always important. So now more people want to get more ads in the Unity platform, because we do know that the gaming world is a very great experience, right? This is a place where people come and play. So you want to have your eyes on the platform. You want to have advertisements there as well. Like I mentioned earlier, Unity did inform its investors that they believe the issues that the company had in the Operate solutions, especially in the advertisement side, are way behind them, and now it's time to grow that market share. Moving into other revenue growth for Unity, they did announce more of their Unity Gaming Services, or UGS solutions. These are solutions that are priced per consumption, opposed to some of their other products which are kind of just priced generally. Here, for example, they just released multiplay and matchmaking self-serve. And a great example of how the create process and the operate process are in perfect synergy, they kind of explained that #1 game I was talking about earlier, Snap, how Second Dinner, they kind of use Unity to create this platform, and now they're kind of connecting it to their UGS services. Unity also talks a little bit about the advertisement side, and like I mentioned, the advertisement side has definitely seen numerous macroeconomics, and many people worry that the changes that Apple has made last year are what's really impacting this. And the overall company says no. Obviously, a few quarters ago, we were impacted with our own issues that we had, but we estimated that the overall in-game ad growth was approximately 10% year over year in Q2, and it slowed down to single digits in Q3, and we currently expect that the sector will be flat on year over year in Q4. The main reason is just the overall macroeconomics, right? Overall rates, people spending a little bit less money right now, even businesses spending less money on advertisement. So they're saying that, hey, this is a market that's not being influenced too much by these kind of privacy changes. What's really influencing it the most is the macroeconomics of the world at the moment. This is also another interesting point that they made. When they look at daily active users, they are seeing an increase in Q3 this year versus Q3 of last year. Despite macro market conditions, users continue downloading and playing games, providing the sticky power of this entertainment segment. So mobile gaming is still pretty strong, and we can see a lot of companies have kind of moved into the mobile space to kind of increase the user experience, like Netflix. Looking at things like this, even though I'm not a Netflix shareholder, it kind of shows that, hey, maybe Netflix might be onto something. The CEO mentions that they still expect Unity to sustainably grow at a 30% growth rate. Not every year is going to be that kind of growth because of the overall market, but in the long term of things, they do believe that's still possible. Now let's take a closer look at some of their financials. They had 1,075 customers with trailing 12 months revenue above 100,000. This compares to 970 customers at the end of the third quarter of 2021. They are saying that the main reason the growth is not that high is because of the Operate solution, and this makes sense. Maybe back then a good portion of their customers that were spending a lot of money were the advertisement side, but as we are seeing the recession sentiment in the advertising market, maybe instead of them spending 150,000, they're spending 99,000, and they're not making this threshold. This is also impacting net dollar expansion rate. This is something that has dropped dramatically, 111% this quarter compared to 142% last year. The drop in their net dollar expansion rate is driven by Operate, so very similar. The advertisement market is very weak and right now is playing a big impact in that dollar net expansion rate. I want to say one of the biggest bearish flags for me for this company is the overall dilution the company is making, and it continues to grow, and unfortunately, as price of the stocks have dropped, this also impacts the conversion of convertible notes, which can overall increase that dilution share as well. They did give us fourth quarter outlook, and obviously this is going to be with the acquisition of ironSource. They do mention for the fourth quarter an increase of 35% to 41% on a yearly basis. For the full year, they expect an increase of 23 to 25%. They do mention that if you compare the combined business a year ago, revenue would actually be down $60 million. So it would pretty much be on a flat basis compared to a year ago, especially with the overall macroeconomic headwinds that we're seeing. I don't think that's a bad thing because ironSource is heavily in the advertisement business, and we've definitely seen a slowdown there. They do expect the Create to continue to perform strongly, which I'm super excited. With regards to ads, they're taking a conservative view because they have not seen the seasonal rise in their kind of advertisement market that usually happens during the holiday season. So for that reason, they are taking a conservative view here. In my opinion, they're actually going to beat the advertisement market and these kind of outlook next quarter. I do think the company took too much of a conservative view here, and we are going to outperform. At the end of the day, I do believe Unity has a lot of volatility, and obviously the advertising market can shift dramatically, but for some reason, something is telling me that, hey, they did a very conservative view here, and they are going to outperform. They also mentioned, for perspective, they expect to break even on a non-GAAP basis and be cash flow positive at the end of this year, and that would build the base for 2023. That's what you like to hear, especially that cash flow being positive and that to be continue to grow on in the upcoming years. So to me, Unity is pretty much a no-brainer in my mind. This below a $10 billion is a company I wouldn't mind holding because I do believe the solutions that it hits in the gaming side, the mobile market continues to grow, the advertisement market continues to grow, their solutions outside the gaming space continue to grow. So again, there are numerous headwinds affecting this space. This is a company in my portfolio that I easily make it a tier 1, so it can be a 10% position in my portfolio. But at the end of the day, no matter how much of a no-brainer I think it is, it's always smart to understand position sizing. So let me know what are your thoughts. Take care, have a good day, and see you next time.